TheoTrade. This is Don Kaufman. January 5th, 2022. 6 minutes to go to the cash close. S&P's off some 80 handles, sparked in very large part by the FOMC minutes. The Fed, not so friendly to markets anymore. So let's get down to business as we're actually watching the trade into the close. At this point in time, looking at the S&P sell-off, there are a couple things that are kind of left to the imagination here. One of which is volatility spiking. It's really nowhere to be found. Sure, on an intraday chart, the VIX looks like it's exploding to the upside. But net, what have we done? Absolutely nothing. So if there's going to be fear driven into this marketplace, mark my words, this is not it. This is not it. And one of the reasons that we're not necessarily seeing that huge, spike in the VIX is, people, this is well-charted territory. One of the aspects I want to bring to your attention here, first and foremost on this Wednesday evening's video, is just this. We're actually going to cruise over to the S&P futures. We're actually going to take the time frame over to a 30-day, 1 hour, and just make the quick point that the VIX isn't necessarily feeling the fear. It's still shy of the 20 handle. The volatility futures are starting to ramp up a little bit, but hey, who's to say? What, a 15% move up in the VIX? Yeah, but again, it's not even to the 20 level. It's like the volatility is shrugging its shoulders. And again, rightfully so. We have seen this movie before, and that is a phrase that I use just incessantly here because, well, the market has. It's seen this movie before. We've actually, again, been in well-charted territory to where we're pulling back once again, roughly speaking, the 4,700 level. However, at the exact same time that I'm saying, the VIX is kind of shrugging its shoulders over here, I am momentarily going to show you when the VIX will really start to accelerate, right? And when volatility starts to accelerate and the sell side activity, if it is to proliferate, specifically what you should be looking for at that time. So again, this is well-known territory over the last 30 days. It just kind of takes us back to a range that we know extremely well, which is roughly the 4,700 level inside of the S&Ps. Now, before I go any further and show you where volatility is really going to explode and expand, which it's kind of doing a little bit into the close because we're actually on the edge of the expected move, which we'll talk about here momentarily, okay? You've got a long ride to the downside, and at least for me specifically, listen, I am a big time options premium seller. And in this marketplace, what really drives fear into the heart of this trader? And the answer to that is, take a look. We're going to actually jump to a 1 year, and in and around the neighborhood of 4,500 on the S&Ps. In fact, I'll even knock down the time frame, make this a little bit easier to see. The level of 4,500 really does kind of strike some fear because one of the most significant VIX spikes we've seen recently came, right back here in, effectively, right, late, if you will, November. We hit roughly the same level again a few weeks later. Well, the VIX didn't necessarily spike that time. But again, seeing today's sell side activity, you're not but a day removed from the all-time high in the marketplace. Nevertheless, there should be a little bit of fear being driven in every trader's heart right now, simply because the FOMC minutes, it wasn't anything unexpected. It just finally put into context, the Fed ain't got your back. They have removed effectively what we term the Fed put. The Fed put is, we can't possibly sell off. The Fed's got our back. Well, now the Fed is saying what? Even the most dovish of the doves, Neil Kashkari, even came out and said, at least 2 rate hikes. Now, we don't necessarily have to believe that there are going to be rate hikes. It's neither here nor there. But right now, I'm telling you, the market believes it. In terms of sell side activity, fear would really be driven, to the 4,500 level. Is that even possible? Is that even plausible for the remainder of this week's trade? We're talking a 200 point, a wild and precipitous drop inside of the S&Ps to really start to strike some fear into the heart of this marketplace. However, at the exact same time I'm saying that, I want you to take a look specifically at the SPX, and this is why You're not seeing the VIX. Again, 1 minute to play left in the trading day. This is actually why you're not seeing the VIX, okay, skyrocket. We're on it. And when I say we're on it, what am I referencing that we're on? We are literally to the penny on the edge of the expected move right here, right now, with 32 seconds left in the trading session. You can even take this down to a 1 day, 1 minute. The expected move this week, and again, I think it's critically important to kind of delineate what that expected move happens to be, okay? Right here is the starting point for the week. That's where the week actually started. You know, as of yesterday, we were up substantially. We almost hit the upper edge of the expected move. So what is the expected move? All right, what's this range? That is exactly $62.48 higher, okay? Or, okay, $62, there's the closing bell, okay? Or $62.48 lower, okay? So you're looking for the $62 move higher or lower. Where are we right now? Oh, for the most part, sitting right on it. And again, you couldn't have had a close that was any closer to the edge of the expected move. In fact, it's worth kind of zooming in on this one for you. We're a couple of pennies off it. And this is something that we've just shown time and time again here at TheoTrade, the efficiency of the marketplace. All right, push that aside for just a second. You want to see something really crazy? All right, tomorrow's trade is going to be absolutely critical. So you're coming into Thursday, jobs numbers coming out Friday. Jobs number, if it's a hot jobs number, it's really going to feed, okay, into the entire, you know, inflation drumbeat is going to be so loud, you're going to be deafened by it. If the jobs number is strong on Friday, that could really cause some panic inside of the bond market. But let's not get ahead of ourselves. At this point in time, this is not about news. This is not about a jobs report on Friday. It's all about the edge of this expected move. Hey, 4,700, just put it at a round number. That is the SPX 4,700. The SPX 4,700, breaking a few points below it, we will start to see the marketplace dynamically hedge lower. That is where we can get that fast, again, precipitous drop, okay? And as soon as we start to break outside the edge of that expected move, and this cannot be stressed enough, you break outside the edge of the expected move, oh, that's when they're going to light up the VIX. Okay, that is when volatility futures are going to start a rocking. Okay, because again, at this point in time, we've seen moves like this before. Now, let me kind of counter. So I want to get off the SPX for a second. It's critically important, the 4,700 threshold, not because it's a big round number inside of the SPX. Push that aside. It's because it's the edge of the expected move. It's a seam inside of risk. You got to understand there is a definitive reason that we ended on the edge of that expected move, because that's a happy place for risk. Okay, where buyers and sellers kind of meet. Pushing outside of the edge of the expected move, things can get downright hostile in the market. Dynamic hedging will kick in and will sell the market off into the oblivion. Then, of course, that would be tomorrow. Then, of course, on Friday, you get the jobs number that's going to come out, and things are going to get volatile and volatile in a hurry. With that being said, let's actually take a quick read in terms of volatility, specifically the volatility futures. And I'm done with the 14-day volatility futures. Jan Vol futures, they're burned. Doesn't make a difference. You want to look at 42-day Feb versus March. Are we in anywhere near backwardation? Not even close. Absolutely ridiculous, okay? We're not even thinking about backwardation. We're in a massive contango. That February is at 2270, March is at 24, yada, 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 okay? Nobody's feeling the fear just yet. Unless, of course, you're over here in the QQQ. The Qs, yes, they did actually fall a full $12 today. Taking a look, though, at the QQQ, this is very definitive, and it is outside the edge of the expected move. The damage being inflicted to the Qs is something that I think you need to start to pay attention to. This is, again, I want to make this just very, very clear. This is not anybody has to, like, freak out over here. But take a look, somewhere around the 380 level inside of the Qs, which of course corresponds, all right, to about 15,500 inside of the Nasdaq futures, things would get downright hostile, okay? Now, on that particular front, there are key players for the very first time in a very long time, key players that have actually fed into the sell side activity. And people, I've been talking about the exact same key players, okay, for literally, all right, first of all, at the point of nauseum, all right, months we've been talking about the key players. What are they? All right, what has sustained this marketplace? What were the best percentage movers in 2021? Microsoft, unequivocally, heavyweight. You know, this is where people go, no, okay, NVIDIA was the, of course, Like, but this, like Nvidia and Tesla, that's yeah, I get it. But the real staples, like if you want to look at like the linchpin in tech, Microsoft got pummeled today, the tune of almost 4%. Google got pummeled today to the tune of 4.6%. I would watch Google very, very carefully at this point. That is one of the largest moves that we've seen, okay, outside of an earnings announcement, period. Right? There's no if, and, or a but about it. Google got pummeled. When you actually put it on the scale of expected moves, okay, you're looking at effectively a 2 deviation move that did nothing earlier in the week, and all of a sudden, okay, smack. This thing is 2 standard deviations outside of it and then some. So the sell side activity, you can feel it, you can touch it, you can taste it. Google is critical. You know, you've been seeing chop and, you know, in Tesla, this is why I'm not including Tesla. Tesla is a chop-filled wonderland. The same thing is true of Nvidia. Nvidia, okay, although it's under the 300 levels, but the central place for trade. But Nvidia at this point, I would say getting under 260 would be a pretty critical threshold. But again, everybody right now is talking about, you know, interest rates. Listen, if the bonds continue to sell off, there's no question that sell-side activity is going to continue and be, again, pretty harsh inside of the Nasdaq. But there's nothing in stone over here that says the bonds are not going to rebound. Listen, at times like this, you got to stop thinking so much about, you know, this stock and that stock. You got to think about the entire marketplace. All right. And then marquee levels. First of all, we didn't even see a correlation coefficient of 100% today. Nowhere near. I mean, there's still 30 stocks to the upside because people were running scared. What do? Okay. Turn around. They're like, I got to buy Walmart. Since when did Walmart become a good buy? Caterpillar as a defensive stock? Really? Okay. Baba, you know things are bad when you're actually turning, okay, to a stock that couldn't get out of its own way, had one of the ugliest years pretty much on record for a market capitalization of that magnitude. Now think about this. Still running into energy stocks. These are not good signs. So over the next couple of days, do not be surprised to see the bonds even possibly bounce. Why would the bonds bounce? It's duck and cover move. Okay, just because bonds bounce, it may not at this point save the Nasdaq. The Nasdaq, all right, is under a little bit of duress. You got to watch on an intraday basis. What's Google going to do? All right, Microsoft. And you go, well, why aren't you talking about Apple? Because Apple's performance paled in comparison to a Google or to a Microsoft, specifically from last year. And as I said, those are kind of the linchpin stocks in the marketplace. Listen, there is a ton to think about, okay, in overnight trade. These are kind of nights where you wake up in the middle of the night and you might be looking at S&P futures. Things could get a little bit wild. Things could get a little crazy over here in the next couple of days. So hands and feet inside of the vehicle at all times. Last thing I want to actually show you here is, again, specifics to the SPX. So the SPX had an expected move for the entire trading week of $62 between now and Friday, which only really leaves what? You're like, well, that's just Thursday and Friday. Yeah, we're actually up to now a 54%, or sorry, a 54%. Okay, again, that is a 54 expected move on almost a 17% volatility. Nevertheless, the most interesting thing over here is back month volatility started expanding today once again. That is, you know, options way out in the future, even 100 days, they're up to like 24 volatility. Okay, so the contango remains. That is short front month volatility over here. Short duration volatility is extraordinarily low. Back month volatility is starting to rise up. I would look for, if sell side activity persists, this front month volatility to absolutely explode. Don't be caught selling short duration option premium in this marketplace. Again, big boy move for Thursday and Friday priced into the marketplace. Volatility right on the cusp of exploding. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.